Hey guys, Jim here. I want to show you guys something. You remember when I've talked over the past couple weeks, several weeks, about how completely unrelated markets can cause dislocations in one another, basically. And I've used it as an example. Even the commodities market, something like corn or wheat or soybeans, um, can spill over and cause a liquidity event, sort of just a massive margin call in a completely unrelated market, um, because someone big has taken too much risk, and they're getting margin calls and they'll have to go square something up. So this is soybeans in a free fall, basically, down 8%. But look at the acceleration, right? So again, there are a lot of dislocations starting to happen today. Remember, I showed you guys the Dow, and we have these really large air pockets underneath the market. Now, you can cascade straight through those. You don't always have to vibrate immediately. You can cascade straight through. And in matter of fact, in flash crashes, that's what you do. You could hit this 32,600, 31,325. You could, there'd be some halts and some things like that and reopenings after uh, a number of minutes, but you could actually, move through all of these numbers fairly quickly. Um, the point is that you're starting to see some dislocation and some acceleration, some unbelievable, unusually fast moves. I have a saying: "Speed kills." It's sort of like the other saying, "Pay me now, pay me later" in the model. Well, speed kills means that the large funds, banks, all the largest players in the global financial markets, they can adapt to almost any type of price move, no matter how extreme, as up or down, as long as it unfolds um, over a certain period of time. And it could even be maybe 2 or 3 week period of time. Um, and they could put hedges on quickly enough to sort of cover themselves in their existing positions, even if the existing positions are leveraged. But if something happens very, very quickly, like this, that's when they just don't have time to run out and put hedges on. And so that's why I say speed kills. So anytime you see really fast market moves that cover a decent amount of territory as far as on a percentage basis, that's when you typically are 15 minutes to a couple hours away from seeing some kind of a spillover move in another market, and it could be completely unrelated. You guys have heard me talk in the past about the when the quants were crushed in the summer of, it was either 2007 or 8, seems like it was June, and there was a violent decline in the tech stocks. Well, at the same time, there was a violent decline in the tech stocks. The bank stocks went through the roof. Really unusual to see a big fast market move in bank stocks. But when the dust settled and the reporters started to sniff around, they figured out that one of the big funds, it could have been Renaissance in New York, and one of the other big funds, the quant funds, that they were hurt so badly, their algorithms were hurt so badly by that fast market move uh, in technology stocks to the downside, that they had to go cover their shorts in the banks. And so the banks, like I said, they were 10, 15, 18% moves in a matter of hours or a day or something like that. Um, so anyway, I always like to pay attention to fast market moves, no matter where they're happening. I don't know if there's any fundamental driver that the talking heads are reporting as far as this move in soybeans, but usually the stuff that you hear on the news is a bunch of BS anyway. Them just looking around for something to blame a move up or down on, and in reality, it's just nothing more than you know a big margin call, money sloshing around. Anyway, the model. If you guys aren't Global Pro subscribers, you don't know what's going on in these other markets I track. But look at this. So this is the model was bullish. The U.S. dollar index, the DXY is the proxy. And into the zone of strength. That's a fast market move, you guys. That's a very aggressive move for the US dollar. Here's gold. The model was bearish into the zone of weakness, free fall, moving gold. Here's crude oil, very bearish with a retest down at 62.50. And I'm just showing you guys, I'm not showing you the real forecast that the extended forecast that I'm showing the people who have actually subscribed to Global Pro. But I just wanted to show you guys in general the type of fast market moves we're getting. Here's my Bitcoin, which you guys have seen, because if you're an AMC subscriber, we threw in Bitcoin for free. So here we go. Look how close we are now to this 37,150 retest level. And you're starting to see this sort of fast market look to it. That is a little unusual, this chop, 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 but I would imagine that we'll get a really fast probe for the last 2, 3, 5 minute bars into that level. Again, you guys have already seen the setup in stocks. So my point is that we've moved into sort of a period of fast market movement. It may turn out in retrospect that the talking heads blame some of this other fast market movements on a spillover effect into heavily shorted stocks or even marginally shorted stocks like AMC. So if we do end up getting an explosive move to the upside, odds are that people will start to look around and want to blame it on something else, and usually that is true. It's just a big margin call that happens all at once. It's a liquidity event. So anyway, here we are. We've moved through this 11 o'clock zone of strength, and I'll have to move this over here. I don't know if we're going to have some strength between now and the close. We have over an hour to go. It's 11:30 right now, so market closes 1 o'clock my time. If not, then we just continue to move it out. And as long as the model's not generating a bunch of zones of weakness, then all of these dips in between zones of strength are basically just, in my model's view, pullbacks within a continuation to the upside. The trend channel, the trend is not, explosive. That's basically your trend right now. But you can see that gets us to our retest level into our zone of strength tomorrow morning. So no matter how I look at this, it looks to me like everything looks positive on our side. So that's it. I just really want to show you guys all these other markets a little bit longer than I usually want to do in the middle of the trading day for you guys. But it is important, and it's actually all good news for your our positions in AMC as far as us being on the long side. All right, that's it, you guys.